All right,
All right,
folks, in
folks,
this
in this
first
first
session,
session,
we will
we
look
will
at
look at the
requirement
requirement
B.
B from March 2020 exams, right? And all right, so our first requirement is saying or is asking evaluate the extract from component auditor strategy, okay, commenting on the audit strategy responses and ethical matters relating to the issues identified, right? So, and point main thing to be noted that for this part of the requirement, we can only use exhibit 4. We cannot look for the answer in exhibit 1, 2, or 3, but only exhibit 4. Another thing, we have to evaluate the extract from auditor strategy, component audit strategy. We have to comment on the audit strategy responses and also ethical matters relating to the issues identified. Right. After that, we will look at the requirement two of this requirement. So, firstly, let us straight away move to the exhibit 4. Extracts, what's extract saying? Uh, the 3 points below an extract from the audit strategy prepared by Negan Associates in relation to their audit of Darrell other section of the audit strategy, including the audit risk assessment, have been reviewed by the group audit team and are considered satisfactory, so you do not need to consider them. They're saying, okay, so um, materiality, firstly, we have internet services in the country have been subject to a considerable disruption. As a result of this, a significant number of customers have cancelled their subscriptions and the company is projected to make a loss this year. Okay, and what is their response to that? Materiality is based on total assets for the first time this year to the significant reduction in revenue and profit based on 1% of assets. Materiality is determined at 1.4 million. In previous year, materiality based on revenue was determined to be 1.2 million. So last year it was determined on the revenue basis. This year it's on asset basis and 1.4%, 1 million. That is that seems to be how much? Uh, there is 14 million into 1% is 140,000 is the materiality determined by them, right? So, firstly, let us jump and discuss about this. What my first heading gonna be evaluation of component auditors audit strategy. First thing first, my heading is materiality. So according to ISA 320, what I'll say, According to ISA 320, materiality in planning and performance audit acknowledges that the determination of materiality involves the exercise of professional judgment. Just let me look at the marks available for it. It's 6 marks available for A. So, sorry, 10 marks available for this part of the question, 10 valid points. Uh, uh, Further, I will say that there are no set rules about how materiality should be arrived at. Further, I will say a percentage is often used to is often applied to a chosen benchmark as a starting point in determining materiality for the financial statement as a whole. It is acceptable to use 1% of total assets as a basis for materiality. However, this is used for capital intensive business, not a company like Darrell Company, which is service based. Further, I will say a percentage of profit is deem uh, an appropriate method of calculating materiality in a profit making business? However, we can see uh, with Daryl Go, this can be distorting in a year of significant losses. The fact that the company has made a loss this year does not mean that materiality should be based on assets alone. Negan Associates should revisit how materiality is determined. It may be appropriate to use a different materiality level for profit and loss balances. Okay, so that's what I will say. Just a second. Okay. So what I'll say further, yeah, what I wrote last, profit and loss balances. Further, I'll say that, for example, one based on revenue, for example, one based on revenue and for example, one based on revenue and other is based on or an adjusted profit figure is more appropriate than the reported profit or loss before tax. The fact that materiality is set at a higher level this year is not likely to be appropriate when given that the company is loss making. And issue unusual trading conditions with the loss of many customers. This indicates that audit is likely to be higher risk So a lower level materiality should be determined or I will say applied. It's it seems that professional judgment has not applied. So far, so good. We are done with the materiality part. Right now, I'm going back to the other part of the question, which is payroll and what it's saying in the payroll. From 1st October 2004, payroll accounting services are provided to Darrell Co by Negan Associates as an additional non-audit engagement. Agree the total. What is the plan audit procedures? Agree the total figure estimated to be 6 million from the statement of profit or loss to the payroll reports generated by Negan Associates. No further audit procedures considered necessary. So for this part of the question, now let us draft our answer. Audit of payroll is my heading. So far, I have scored 3.5 3 marks. Now, 1 mark per relevant discussion. What I'll say that, sorry, the audit work planned on payroll appears to be limited due to the audit firm Nigan Associates have performed payroll services. Payroll service for Darrell Co. since 2004. Okay. Further, I will say this is not appropriate and will not provide sufficient and appropriate audit evidence regarding this 6 million payroll expense. Given that payroll is material to the financial statement based on Nagan Associates, on materiality threshold of $1.4 million. Further testing will be required. Well, that's the professional issues I discussed. Now, in this part, we also have an ethical threat as well. So let us discuss on that. An ethical threat to auditors' independence to auditors' independence is raised by the provision of the payroll service to the client. There is a significant self-review threat there is a significant self-review threat, which means that Negan Associates over relying on work they has performed on payroll as a non-audit engagement and are not planning to audit. The $6 million at all. providing this type of service might be allowed in the jurisdiction where Negan Associates operates. When performing work on the financial information of a component for a group audit, the component auditor is subject to ethical requirements which are relevant to the group audit. Therefore, IESBA Code of Ethics should be applied and code states that for a listed company a firm shall not provide a firm shall not provide accounting or bookkeeping services including payroll services, uh, which results in financial information which forms the basis of financial statements, which form the basis of financial information on which firm provides the opinion. Finally, I will say that therefore Daryl, who is a listed client and the service should not have been provided. Done, done, are done. We are done with the second part of this question as well. Now we will move to the next part, which is related to the sale of property to uh, group CEO, Chief Executive Officer. So let us look at the scenario once again. Just a second. Yeah. So here it is, sale of property. Um, Daryl Co. sold small unused building located on the coast to the group CEO in February 2005 for $50,000. So it quantitatively it is immaterial, but qualitatively it is material, and the amount is still outstanding for payment. What are the planned audit procedures? Confirm 50,000 is included in the receivables within current assets. No further audit procedures are considered necessary because the transaction is not material to the financial statement, and local accounting rules do not require disclosure of the transaction. But as a group, in the group financial statement, detailed disclosures would be required as per the IAS 24 related party transaction. So, what I'll say, sale of property is my heading. Then, what I'll say in the individual financial statement of Daryl Co. under local accounting rules, the sale of the property to the group CEO does not need to be disclosed. Till here, no marks. We'll get marks after the point which I will write now. That, however, from the group perspective, it means the definition related party. And well, need to be disclosed in group consolidated financial statement. As a transaction were considered to be material by nature and therefore the group auditors must therefore provide instructions to the group to perform the additional audit work. The cash proceeds the cash proceeds from the sale of property are well below the materiality level determined by Negan Associates. So this might justify the minimal audit procedures in relation to the which have been planned in relation to the in relation to the individual financial statements. However, procedures do not consider how the Profit. Second. Profit or loss being made on disposal is determined or whether the asset has been properly removed from accounting records. There may be an incentive to recognize profit as the group facing trading difficulties. That's it for this part of the question. I hope you get it till here. That's how you should have drafted the answers for this part of the question. I hope you get it. And next part, we'll discuss the further. Bye bye.